Welcome to another RES Wave update on the Dow Jones. So basically, so far, this is the count that we're still sticking by in terms of what the Dow Jones is doing. And so far, since that E-wave low, right after I wave revisioned on this, basically this move here, right? We've been going up, and we'll go up until we hit that target around 37,000. Okay, and that's basically the same length as wave A in this type 2 expanded zigzag, right? So very interesting indeed. This has done a lot of, how can I say? This has done a lot to make people think that the overall pattern is the beginning of a bull market and that it's mega bullish. But the truth is, well, according to RES Wave, this is nothing more than a repeat performance of the B wave. It's just a bigger version, but B wave and D wave are two waves that point upward in a bull market correction, right? So if you have a look within the B wave, you can see that obviously the C wave was a lot weaker. But the thing is that you're starting to see that now. Like if you have a look at the A wave, how sharp it was, you're starting to see the C wave also slope off like that because it's losing strength. Okay, so these are key components. Now, yes, we went through 1,000,001 wave revisions during this period of time because it is choppy as hell and it was a pain. Now, the E wave was also a pain because at the end of the day, look how small it was. But to me, we have already had the confirmation that this is the final move up. And by looking at other markets such as cryptos and certain altcoins, I can see the final run up in progress, and some of them will top out earlier and some of them will top out later, right? Not all of them will top out at the same time because it's just similar timing, yes, exactly the same time, not always. So it's just something that just seems to be the way. But however, because of what I expect to be coming, we could see it across the board. It might happen at the same time. I don't know. I can't tell you that much. But anyway, that's not the point. So the point of this video, I suppose, is to have a look closely at what's happening right now. Okay, so if we go to the hourly, or yeah, let's just stick to the hourly for now. Okay. So what have we seen so far? Okay, so we've seen wave 1, wave 2, right? Now, judging by how far we have left to go, and also the overlapping between some of these waves, let me just check this out for a second whilst I'm here. So it looks like we're still in wave 3. So 1, 2, 1, 2, 3. Obviously 3 is ongoing. So we should get something like the rest of 3, 4, 5, and then correction. Oops, wrong one. 5. Something like that. This is something that I expect to happen in this market. So if you got in when I told you to get in right around this area, you would basically be in profit at the moment, and you should be holding on to that because there's still a little bit to go. Right. So what else can I say about this chart? So if you look at the pattern in TRX Tron, I reckon it's following this pretty closely, and it will probably also continue to do this very same thing as it approaches that top. Okay, so I've already talked about trend analysis. Okay, if this was a wave 3, then we would have seen, okay, it is possible to see this type of correction in a wave 3 if it's a strong move, right? However, this part here, the latest part here, probably would have gone straight up like that and not created such a sideways slope, right? So those are the things to bear in mind. Now, this is very important to understand this chart, because overall it basically spells out what is going on in a lot of other markets in very interesting ways. Okay, this D wave is significant because if you think about US oil, it's in a D wave. Okay, we need one more move down in US oil before the correction is complete since 2009, and then we're going to go up on a major bull run, right? Now, how deep the correction in oil is, I don't know. It could go negative again. I wouldn't be surprised. In the case of the Dow Jones, I do believe that we have to go down to the low of the previous wave 4, as I've mentioned before. So just rehashing on that. Okay, what happens after this? Massive bull run. We're talking a massive, huge bull run. Will it go up in a straight line? Well, I wouldn't be surprised if it did, but more realistically, it'd probably just go like this or something. Like, let's be real. Okay, it'll be V-shaped recovery from that point on, because that's the pattern that you get typically. Actually, it's more like 1, 2, 3, 4, 5, and then a bit of a pullback, and you get your cup and T handle pattern, and then you continue higher. So that's the kind of thing I'm seeing moving forward. Yeah, I mean, there could be variances of that, but in a nutshell, yeah, let's just keep it simple for the sake of this video. So I don't think there's anything else to explain on this one. This will be the end of wave 2 of wave. So this is a third of a third of a third wave. So this is the end of wave 1 since 09. Sorry. Here's the end of wave 1 since 09. Okay. Using the correct colors as per. Actually, it's actually an I. Okay. And then this will be the end of wave 2. Okay. So I find it really interesting how cryptos have corrected since 2017 high or whatever, and how it's gone basically straight down as opposed to the Dow Jones. But I do think that the coming correction will actually cause cryptos to basically correct a lot deeper in one wave, because this is going to be a 5-wave move. It's going to be like GFC 2.0. It is the same wave. It's a wave E, and the GFC 2.0, sorry, GFC version 1 was an E wave, right? That was an E wave. It's 5-wave move. So that's the thing that we're going to see. So as I've mentioned previously, this is the same as what we are in now. This is an expanded, right, zigzag, right? And it's got similar properties in it within the wave structure. It's a little bit more harder, this one, to decipher this pattern, because I think you saw 335 happen immediately, and then you had a large wave D, and then an E, and then your final move, which was small. So that was an interesting one. So, but this one is obviously going to probably go more impulsive towards the end, because the C wave, A and C waves are larger. Yeah, so all in all, it's the same patterns always occur according to RS wave, and those corrective patterns are vital clues that we're using across all markets as we prepare to embark on a massive bull run of epic proportions due to money printing, inflation. Money supply obviously is from the money printing, and inflation that will follow after the following behaviors that people have with money during these bear markets and uncertain times. People tend to stash away a lot of money they don't want to spend, but then once the correction is over and we have a bull market, all that money basically comes out of hiding, as per the words of Milton Friedman, and Martin Armstrong and various other people, Mike Maloney and certain others. Basically, that money comes out of hiding and basically floods the market and sends prices skyward. So you may want to be invested and involved in some kind of asset by the time we have this correction complete, because what comes next will be the opportunity of a lifetime, never to be repeated again, across all asset classes. But for now, people who have bought in to this already, thinking that it's going to happen here, beware, because there's a lot more behind these moves that you may think, and beware of excessive FOMO and overhyping. Don't buy into certain things like that. You should always do your own research instead of just listening to other people, including myself. So hopefully you found this video interesting and informative. Thank you for watching.